Hi, welcome back to Tyler Trades Stocks. I'm your host, Tyler. Today, I just wanted to drop in and give you guys an update on some stocks that I've put out there on your radar lately and give you a new stock pick today. Talk a little bit about how to build some generational wealth. So, today I'm going to kick it off with Microsoft, ticker MSFT. Um, I've been I let you guys know that it was a pretty good play, anything under $430. I've been actively buying it at those levels all the way down. It finally has found support. It bounced and found support at the 349 level. Since then, it's been on a 5-day tear, and it's gotten all the way back to $390. So if you were buying all the way from 430 down to the 350 level, and now are buying back all the way up to 390, your cost average is looking pretty good. So we're looking forward to get up to that 398 level. If it can clear that level, that'll be the next level of resistance. Kind of lines up with the 50 daily EMA, and then 9 weekly EMA is right there. So if it can clear that level, I would say, and hold it, the next levels you need to look for are 410 and then ultimately 430 back to there. Anything above that, we're going to see possibly a little mega run up to 480, and the next level after that is 550, new all-time highs. So that's kind of where I see it going, although it could also break down and pull back and consolidate for a little while. It could consolidate a little while at this 390 level before it decides to go to 400. So make sure you're doing your due diligence on how you need to make your trading and do what's best for you. With saying that, I want to talk to you a little bit about dollar cost averaging. That's going to be our topic today for building wealth. Like I said, you can buy Microsoft on the way down, little by little by little. And what that's called is dollar cost averaging. So the concept is you'll buy a share like at 430, buy a share at 420, and so on and so forth, all the way down to the bottom of where it bounces and then comes back up. If you do that over a period of time, you will get a certain amount of shares at a level that's kind of an average of where the range has been going. So you won't necessarily, you don't want to buy everything in one lump sum. Like let's say you have $5,000 to put on it. You don't want to buy it all at the same price. You have a higher risk of not being profitable. So what you would do is take maybe $500 and break that up over 10 different buying opportunities and get it at different levels as it goes down. And obviously you want to buy at the lowest possible price, but nobody can time the market. So that's what you would do. That would be called, when people say DCA, dollar cost averaging, that is what they're talking about. Okay. Next, I got IBM, a little IBM update for you. I told you last time I had a call and I was looking for it to push up to 290. The price was at 265 at the time. So this thing has been looking pretty good. It's been steadily inching higher. Had one or two pullback days, but we've made it there. We've made it to 290. So if you got in on that trade, and you got a call option and rode it from 265 to 290, you're probably looking pretty good in the profit right now. I've already taken my profits on it. I do have long-term shares, and I did nibble some down at the 265 level to add to my long-term shares. But as far as the call option go, I'm out of it. I am going to continue to watch it as it's one of my favorite stocks and one of my long-term plays in my long-term portfolio. If we continue, we could probably see it going as high as, I think, $330. So I think that's where it ultimately wants to go. We might see a lot of resistance there, and heavy consolidation for some time, and eventually I see this ultimately going to 360. But that's what I see. You do your own due diligence and let me know where you think IBM is headed. Are we headed for a bigger pullback, or are we headed towards that 330 level? I have one more stock I want to put on your radar. It's a new stock that I haven't introduced to this channel yet, and I've been dollar cost averaging this play for quite about 4 months now, and that is Netflix. The ticker symbol is NFLX. I'm pretty sure everyone is pretty familiar with Netflix, and they have finally, I think, have found a bottom. They've been struggling for a little while. They looked like it was going to pick back up, and then it pulled back again. I have dollar cost average, a good amount of shares, probably in the 82 level. So this thing went pretty far down, almost, like $70 recently. So that would have been the ideal time to buy, but I was buying from 90 all the way to 74, all the way back up to 83. So I ended up right there around the 82, 83 level as far as my dollar cost average goes. But it is now on the up move, and looks like it's trying to gain some legs and break out. It has finally closed a weekly candle above the 77 level, which is good news because it closed above the daily 20 EMA. And now look for consolidation at this level. Look for it to maybe retest that 77 level and then bounce from there. And if it can gain some ground, I think that the stock is, the next stop is going to be 82.50. So if it can hold that 77 level and retest, might be a good time to put in a call option. That's might be what I do, is maybe put in a call option and play it to 82.50. So I see it possibly going to 87 after that if it can clear the 82.50 level. But that's what I'm doing. You do what you got to do. Well, thanks for coming and watching my channel. Don't forget to like and subscribe and hit the notification bell. And we'll see you guys in the next one. And don't forget, it's 4th of July this weekend. So happy 4th of July to everybody. And you guys have a safe and blessed day. Thank you.